Hello, everyone. Good afternoon. We had a brief technical difficulty, but we're back. It seems everything okay. I hope. Let me know if you guys can hear us. Let me know if you guys are seeing anything out of the ordinary because we had to reset everything and we are starting fresh. Yes, that's why we're a bit late. But we're back. We're back. We're here. We'll be discussing a few good things. So let's wait for a couple of minutes for some of our other guests to join us. But for now, relax. I hope everyone's seeing the live. I mean the charts for what we'll be discussing today. It's the it's the USD JPY chart currently at the moment. So I don't know. I've been enjoying watching USD JPY recently. Uh, it broke the 150 barrier a few weeks ago, almost a month ago, and then after that, it stayed around the 151, 150 level. It tried to. I didn't reach the 152 level, but it was able to break the 151 all-time high. And then after that, as you can see right now, it's around 148. Um, it's still looking like it's going up, but since there's already a huge downtrend, and there's a very quick downtrend, a reverse trend from the few months of it moving upward. We're back to being we're back at the 148 level, which I'm sure the commissioner for finance commissioner of Japan is excited for. All right. Let's see. Let's check the chats. Okay. Before we get started, let me fix this. All right. Hello, everyone. You see what's happening inside the behind me, and you will be seeing the charts that we'll be discussing. But for now, let's look at Forex Factory. So this is a good habit to have. That is one of the things I would like to share. That you want to always be looking at this if you want to be trading, and always be aware what's going to be happening in the market for the upcoming week. So as you saw earlier, this one oh wait, switch. You there. So as you saw earlier, this one was one of the reasons why the USD went down against the yen. New home sales for US dollar was below expectations. The previous prediction was around 719, and there was a forecast of 724,000. But currently, it's only the actual result for the report was only 679,000. So there was around 50,000 difference for new home sales, and because of the one of the fundamental information that happened that showed us that the dollar uh, has gone down and the dollar strength is slowly has reached its point for now. That shows why, that's one of the fundamental reasons why the market has shifted. So, so while we wait for a few more guests, for those who are here, welcome, welcome. Nice to see you guys on a Tuesday. I hope you had a wonderful time over the weekend. For us here, we actually had we had a holiday. We're supposed to have a holiday. We'll be having a holiday on the 30th, but the government decided to move it to yesterday. So we had a mini, short, long weekend, which is Friday, Saturday, and then Monday. So, but that doesn't stop the market. So I was able to get in a few trades in yesterday, even though it was a weekend here from our country. But for you guys, I'm sure that you guys went to work and hopefully you were able to put on some good trades, some good positions, and hopefully you factored in some of the ideas that we've been giving here at Trading Star. So let's check. Okay. Let's move this here and this here. All right, we will be discussing the next the slides or the fundamental information that will be coming up. So today, these guys are already done. The only important information for today would be the consumer confidence from the central bank. We're expecting a 102.6. That was the previous one, 101 as the forecast. And let's see at 11 p.m. tonight. Again, reminder, we are +8 in the GMT, so we are using the Hong Kong time, Singapore time, so adjust your schedules appropriately. But for us, it's going to be 11 p.m. for that schedule. Some manufacturing index, some some information from members from the FOMC. Tomorrow, for those who have a who are excited, or those who like to trade with the Australian dollar, their CPY is coming up tomorrow. And for those who deal in New Zealand trading, there's going to be the cash rate will be discussed tomorrow again by their government finance. Then there's gonna be some German CPI and then some Spanish flash CPI. It won't be that huge of a movement since it's mostly a single country or a few countries. The thing about the euro, Germany has probably the strongest effect. So if Germany moves, usually the euro moves with it. So there's a lot of strength with the German movement or the German economy when it comes to the euro. So Spanish flash CPI, and then about 9:30 tomorrow we have preliminary GDP for the US dollar. You always want to check for the US dollar because US dollar is usually the base for every other currency. So always check for that one. So Let's see, it's around 4.9, but the forecast is around 5. So a slight improvement in the expectation for the GDP of the US dollar. And then on Thursday, a few light information. The Chinese yuan, this isn't considered one of the majors yet, but I'm sure there are a lot of you guys who like to trade the yuan, so there's gonna be some information coming up on Thursday at 9:30 a.m. It's the expectation of 49.5, which has an improvement to 49.8. I know it doesn't look huge when it comes to this, but trust me, sometimes the market just wants to find an excuse for that to kick in. So some information on Thursday. There's gonna be some core CPI and CPI flash for the euro, and then by 9:30, some major data for Canada. It seems that they'll be reporting their GDP month to month, and some core price index for the US dollar, and unemployment claims also that will be coming up for the US dollar. That one you might want to look into, because as you can see, the US dollar has been trending on a downward bearish trend for the past few weeks. So uh, depending on the reports for the US dollar, which we checked earlier, and this one, it might continue. Right, and lastly, by the end of the week, we will be checking on a few things. Nothing heavy during the morning and the afternoon shift, but as soon as it reaches around nighttime, or after the US market opens, then some major information will be showing up. For example, one is ECB President Lagarde will be speaking on Friday evening. Usually, just the tone of the information, or just the tone of the speech, traders already assume or take advantage of positions predicting future movements in the market. And that is what we'll be discussing today. So today we'll be discussing market sentiment. So, but before I give you the information on that, let's finish up all of the remaining important fundamental data that you want to be checking out before you trade. So we'll go back to Lagarde's speech. But after that, after the US market, there's going to be some info for Canadian employment change and Canadian unemployment rate. For those who like to trade, Canadian dollar, USD, usually is the base currency for that pair. And for the past few, I noticed past few weeks, usually when the USD CAD was going down, the USD JPY was going up, which is weird because you would expect that since they have both the same base, it would have the same direction. But it was a relatively weird combination during that. And let's check out the USD Canada for you guys. See, there was movement, but it isn't as sharp as the movement of the Japanese yen. All right, and finishing up for Friday is around 11 p.m. here, but US will be showing their ISM manufacturing PMI, which the previous was around 46.7, but their prediction is around 47.8. So a big improvement with regards to their manufacturing PMI. So For traders, looking forward to you guys giving us some updates on how you're gonna trade those with the fundamental information that you guys will be learning this week. But as for the topic for today, so again, for those who just caught up, welcome. We'll be discussing today is market sentiments. So, what is market sentiment and why should we bother with market sentiment in with regards to trading in the financial market? So, remember a few weeks ago I mentioned to you guys when I started discussing the fundamental analysis that there were three analysis that you should always be looking forward when it comes to trading in the market. First is the fundamental, which we discussed a few weeks earlier. I believe last week we discussed the technical side. This week we'll be discussing the last of the three fundamentals, which is the market sentiment. Now, this one is probably the hardest, or well, not the hardest, but this is one is the hardest probably to quantify because market sentiment in essence is people's opinions on the market, and you need to have a grasp of how traders think or how they like to view the market or how they view the market. And also you have to factor in the volume, because even if I think a market is moving, let's say USD Canada, let's say it's obviously going on a downtrend, it's a bearish direction, but and I might believe that it might continue going down. But if the volume is actually bigger on the bullish side or the buying side of the market will shift upwards and leave me wrong in my trade. But again, that is something that you should be factoring in with regards to trading in the currency market. So how do we do that? First, let's check. So we have to understand first that what is market sentiment. So let me get my notes. What is the definition for market sentiment? So here it says that basically market sentiment in a nutshell, so that it'll be easier, is how people view the market, see the market, and how they trade the market. So how they be moving in the market. So like I said, even if the strong direction is a downward trend, for example, let's show you guys. So, as you can see, this is a strong trend for the market, and it's this one. There's no specific. It's not easy to create a trend line for this one with it having a strong bearish position, but you can try to put it like indicate it like this. Alright, so currently this is the trend line that we're setting up. So our sentiment is that it's going down with because of our trend line. So for those who are curious how we set that up, feel free to watch our previous videos about technical analysis. Feel free to watch also one of my colleagues who is a professional chartist in I believe he goes on every Wednesday. So he's a much better chartist than I am. So you should watch that with regards to uh, trading in the market. But this is the idea when it comes to trading, or when it comes to moving the market downward. So right now there's just a when it comes to market sentiment, it's usually just about, do people think that the market is going up, or do people think is the market going down? So there's just basically a bullish sentiment or a bearish sentiment with regards to the market. Now, if you consider, this is the 1 hour trend. If you considered it a daily trend, you see that the direction has been going down for quite a while already, and it has, all right, and then you see that the position of the market, see, and our trend line is actually right in the middle of the bigger trend with regards to the market. So let's go back. So that's how you view the market sentiment, by using some of the technical analysis of the data. Now, as traders, we are very in tune with our own opinions, with our own thoughts with regards to trading. Sometimes, since us traders, we do a lot of research, we do a lot of analysis. Let's assume that we combined both technical, and we combined we combine the technical, and we also combine the fundamental research that we've done with regards to currency pair, and then we are ready to trade. And let's say that as soon as we got into position, we are already biased for that position. So that's where our emotion kicks in. And remember that every single trader is a human, and every single human has susceptibility, for in varying degrees, of course, when it comes to our emotions. So some factors, one huge factor with regards to market sentiment, is actually the emotion of the traders with regards to the market. So that is something that we want to focus on, or we want to put a bit of a deep dive into, because so that you would have an idea, so that when it happens to you, you would know that, number one, you are not alone, and number two, at least usually after being aware of something, you can check yourself. As the saying goes, check yourself before you wreck yourself. Alright, let's go back to USD JPY. Right, first emotion that you want to check into is, number one emotion of the trading market is, number one is fear and greed. Traders sometimes are very fearful with regards to holding their positions in the market, especially for those who are relatively new. They see they see that they're losing $100, $200, $500, thousands of dollars. But sometimes holding that position is the right play, as long as you did the proper research. So always remember that whenever you do a position, don't forget your stop loss and take profit. Yes, we've said it millions of times, but you cannot mention that enough when it comes to trading in the market. So number one is fear. Number two is on the other end of the spectrum is greed. Make sure that if you see the market already hitting your take profit, some traders like to move their take profit up to increase their earnings. Um, I'm not saying that's wrong, but what I'm saying is learn to trade with the fix your fundamentals first, fix your basics first, and then you know how to break that system, or how to break the usual uh, standard operating procedure once you're familiar with once you're familiar with trading the market. Number two, there are also those who have an over exuberance and that panic during the market. One of the biggest things that you can see during trading hours is uh, huge candlesticks. So as you can see with the USD JPY, for example, as you can see here, there. So there are huge movements in a span of a couple of 1, 2, 3. So each candlestick is 1 hour. So in a span of 4 hours, a market has moved. Uh, how many? Let's check. So from here to here, about almost 1,000 pips. So almost more than 1,000 pips. So that's almost, depending on your lottage again, it could have reached $10,000 in the movement with the market. So those things you are looking into and checking, you might want to relax, and as long as try not to, probably one of the better advice that I got is try not to look at the money that you have in the market as money, and they are more on numbers. So hopefully that helps you guys. Honestly, that advice didn't help me when I started, but for some I know it helped. That advice that helped them out. Number three, hope and despair. Never some so whenever you're in the market, you want to believe that all of your trades are gonna work out because you did all of the research and you did everything right. But always remember that the market dictates the movement, and not follow. It doesn't follow any specific rule. So if the market decides to move up, even though all of the data is on a bearish downtrend, the market will move up, and just accept the fact that you've lost. So regret aversion. So this one is an interesting one. Traders who regret missing out on a profitable opportunity may enter late, contributing to bullish sentiment. So this is a really bad habit. Let's zoom in a bit so that you guys can see the importance of this one. Sometimes before going into the trade, I hope you guys have a habit that you already know the price that you want to get into. As a standard position, like we discussed last week, you want to be able to buy on the support or the resistance levels and sell on the resistance levels also. So, but sometimes, especially if you're a bit busy or sometimes you're distracted with a few things, you do a few things, and then when you come back on your trading desk, you see that you missed the number, or you missed a specific price point where you were where that you think that would be the perfect buying position or the perfect selling position, and the market has moved. Let's say it's already in the middle. So to give you an example, let's say you were planning to buy from here. Let's remove, fix this. trend line. We're setting it for horizontal. So okay. So for this example, let's say you wanted to buy from this position going upwards and then take profit on this position on the ceiling. But since you weren't able to buy here, you buy at this position. Um, that could have been a good idea, but you should always consider. Let's put in other support and resistances. Let's put it's here. Right. So imagine if you had followed through on that position, you would have cut yourself off from a bad, or you might have gotten a little bit more or a little bit less and from the market, but you were already late in coming into the market. So what you should have done instead is just wait for a new trade, or wait for it to come back to the original price point where you thought the idea would be perfect. So there's like we always say, there's always opportunities in the market, and just by holding, sometimes just by being patient, you're making a lot more progress than you think. So that is that one. That is for that part. Number 5. Okay, this is one of my one of our favorite weaknesses is confirmation bias. Traders may selectively focus on information that confirms their existing beliefs, reinforcing prevailing sentiment. So always make sure that with regards to market sentiment, with regards to the market moving in a certain direction, do not be hard-headed to think that your position is still the right position. So make sure that when you get into the market or join into the market, you always be flexible, because the market tends to shift sometimes when you move into the market. So if you're one of those hard-headed people that likes to trade that way, that they believe that their position is always correct, there is a strategy that you can do. This is what you do. Instead of one strategy that you can do is put in a smaller lottage with regards to a position, and then make sure that you can keep holding that, and you have a capital base you have a huge enough margin that you can hold or withstand the movements or the fluctuations of the market. That way, even if and then secondly, make sure that whatever position you get into, the swaps that on that specific trade is always a positive, so that even if you hold that position for a month or a few months or more than that, you can keep generating income just by keeping it in the swaps alone, because eventually the market always returns to a certain degree, unless it was the USD JPY where it hit an all-time high. So number 6 is there's a herd mentality that you have to be familiar with. It's the tendency to follow the crowd and amplify the prevailing sentiment. So as the title of our stream for today, market sentiment is about following the crowd, and which shows during during the movement of the market. So let's just remove this again so that it's cleaner. But you guys have the idea already that market sentiment is basically, in a nutshell, it's just people's opinion about the market. Now, how to take advantage of people's opinions in the market. There are a couple more. There's contrarian behavior. We will be getting into that in a bit after this on our next topic. And then there's market hysteria and impact on trading strategies. So I'm sure some of you guys have already heard about algorithmic trading or very familiar with algorithmic trading. It's basically creating an algorithm or a set of principles wherein if a set program for a given situation on the market, where if this happens and this happens and this happens at this rate, then we should be buying at this price. Or if this happens and this happens and this happens, we should be selling at this price. So it basically removes all of the emotion away from the trading, which is a huge not disadvantage, a huge weakness for us traders, for those traders who are still emotional with regards to their money in the market. So making sure that as you trade, that's why also we discussed this on an earlier topic wherein you log in your trades, because sometimes you find your patterns as a trader, and then as you find your patterns as a trader, you will see that there are certain patterns also for good trading ideas or good trading strategies that you can apply for yourself. So those are the things that you should always be considering. So before that, let's check for some chat. Hello, Sheriff. Good morning. I guess it's morning for you up there. It's very important for stop loss and take profit. Yes, thank you. I hope you're not tired of us always pushing the agenda. It's not an agenda, but I guess you could call it our agenda, that for people to have the discipline to always have the stop loss and take profit whenever they trade in a position. We always emphasize risk analysis over here at Trading Star, and you can never be too safe with regards to taking care of your money. Remember, we want everyone to make money here in the market, whether it's a lot or a bit or just enough. We always prefer to make a small amount of money than losing a lot. So habit of having a stop loss and take profit always takes charge. And hope following crowd won't hurt in the long run. Usually when it comes to the market, that's a good thing. But I will be discussing earlier that you should always be flexible with regards to the market, and always make sure that you are combining all three of the analysis, all the analysis that you should always factor in. So the fundamental, the technicals, and the market sentiment. So thank you, Sheriff, for sharing your thoughts with us. I hope you had a good trading week. So, alright. So going back into the market, some indicators that we could that you could use is the commitment of traders report, So this report shows the commitments or the trades from future markets into a report that is released every. It's a published weekly report from the regulatory agencies that shows the positions of institutional traders, hedge funds, and other major market participants. So basically, remember when I said that the volume is the most important thing? Um, these guys are the heavyweights with regards to the trading. So one position from them will sway the market more in one direction than the other. And even though there's like 100 NOAs trading, our 100 positions won't be enough to sway one position from the institutional traders. So that's why the commitment of traders report is something that you want to get into, or you could be analyzing if you want to deep dive into the market sentiment idea or the market sentiment part of analysis when it comes to your trades. So another one is an indicator, which is the speculative sentiment index. It's provided by certain platforms. So for those who use MetaTrader, SSI measures the ratio of long to short positions held by retail traders. So for contrarian traders who often use SSI to identify potential reversals, a high ratio of long position may signal bearish sentiment and vice versa. So even though following the trend or following the market sentiment is our standard advice or our best advice for given the topic, always remember that the contrarian side or the other side, there's always also an opportunity. And that in itself is why trading is very, I wouldn't say hard, but very nuanced, because both sides can always make money. It's just a matter of timing and making sure that you are in the market or you are aware of what you're doing in the market. So hopefully that helps you out as much as it has helped me. So let's do a quick rundown of factors that influence the market sentiment of people. Right. Number one, economic factors, economic indicators. So economic data releases, GDP, employment. So basically the fundamentals that we showed you earlier. So those affect whether consciously or subconsciously. Like for example, we don't notice it sometimes but we tend to put in our bias based on the things that we read into the market. And some of that. So central bank policies. So sometimes central banks sometimes they openly share with the idea, or sometimes they don't, that they'll be manipulating the market to help out their currency. Geopolitical events, so political instability, conflict, significant political events. I think I've discussed the Israel-Hamas war already too much, or a few times already, to discuss how that shifted the market, how out of nowhere the market shifted and everything went to the dollar or the gold. And maybe what's happening right now with the US dollar is the sentiment that is the traders are either liquidating their positions or they're switching sides to a bearish position on the market. So market news and headlines, again, traders can be very emotional. So you always have to be ready that sometimes one type of news will swing the market huge in a direction. Global economic trends, some earnings reports, so interest rate differentials, trade sentiment indicators. As you can see, a lot of these factors all combined. Can you notice something? That they all are factors that move and are then move towards the what do you call this? The fundamental side of the analysis part. Yes. No, doesn't make sense. Well, as you can see, there are a lot of factors that move into it. Uh, there's also technological developments, market liquidity and volumes. This one I discussed earlier, that one person moving in with one lot versus one person, or I mean three persons moving in with one lot each versus one person moving in 100 lot. The volume would shift to that one person on the other side. See, so think of it as a seesaw. The market is always shifting and trying to move in one direction or the other. So even though there is more market, there are more people discussing over here that it's a bearish position. It still moves on the other position with regards to the market because of the volume of the other side. So psychological factors, speculative behaviors. There are since the market has a lot of money, it would not be amiss to me that there would be a lot of gamblers in the market. Um, Being a gambler is different from being a trader, but since the market is very liquid and has a lot of opportunities, it tends to attract a lot of gamblers as well. So there's a lot of gambling behavior, speculative behavior with regards to trading in the market. And lastly, there are unforeseen or what we call black swan events that can lead to rapid changes in sentiment. So traders may respond to unforeseen developments with risk aversion or risk appetite. Again, traders react differently with regards to different situations in the market. Um, so any black swan event, like for example, the war that I just mentioned again. Uh, you guys might already be tired of hearing that war, but that war is a perfect example of a black swan event. Um, the market shifted hugely towards safe haven assets, and because of that, you should always be just be aware and always be updated with news and what's happening in the market. Right. So I said earlier that I'll be running through a brief rundown about contrarian behavior, contrarian trading. Uh, Contrarian trading is basically just following or just countering the idea of the market. So if the market is already going down, it means that at some point it will have a trigger or it will have an indicator that will show that the market would shift to the other direction. So for those contrarians, um, they have to be always updated on what's happening. They always have to know what's gonna be the best time to shift in the direction, because there are false breaks in the market and false. Let's show you guys so that you would make more sense. So this was last November. So So as you can see, it was a huge movement for the USD JPY going up. This is a weekly candlestick, so there was a huge movement going up for 1 week of the market, and then right after that, before it reached the 152 level, it started going downwards after that. So that is an example for contrarians, just waiting for the opportunity for the market to shift. Now, probably the issue that I have with well, not I have, but one of the one of the weaknesses for this type of strategy is that you have to be really, really patient when regards to waiting for the market to shift to your direction. I mean, for again, it depends on your typical strategy as a trader. Um, but always, if you're gonna go with a contrarian strategy with regards to the market, uh, patience is your best friend. So that is not something that I personally prefer to do, or that's not my personal style of trading. You guys already saw that type of trades that I enjoy. If you guys haven't seen it, feel free to watch some of our past videos, past streams. Those videos show you some idea of who we are and what we like to do, how we like to trade. So, um, in fact, maybe you guys can discuss or share some of your ideas with me. Maybe I could apply it. I could try out your strategies with the market. I'm always on the lookout for better ideas or things that I could apply with regards to my personal trading in the market. Alright, next. Now we will be discussing. How do I transition this? Let's discuss the one of the favorite terminologies or favorite phrases of traders in the market. Because I enjoy, number one, I enjoy this phrase. I keep hearing it from my colleague, and first I don't personally agree 100% of it, but I can see the logic behind it. So the phrase is buy the rumor, sell the news. So this was coined by my colleague, and he discussed this idea with me that we should always be using the phrase buy the rumor, sell the news. So if there is a phrase that regards to market sentiment, this would probably be the phrase that you could compose or comprise everything in. So buying the rumor and selling the news is the easiest way to understand how market sentiment applies to the market. So there's gonna be a few information. It usually starts with the rumor, and then there's gonna be a buzz, some anticipation, and then the actual news comes out, and then the key part is when will people take profit and exit their positions. Because whenever, let's say there's a rumor that the US dollar will be having or will be moving up again, or they'll be increasing their interest rates again. So how will that affect the market? Will it be better for the dollar? Will it be stronger for it? Will it be weaker for the dollar? So people will be discussing. So let's, for example, let's check Let's check for Friday. President Lagarde will be discussing. So right now we are in the rumor phase. We could hear the rumor that some of these things are happening. That for the ECB, for one of their plans, um, and then we can discuss, put our positions in the market, and then by Friday, when that thing, when Lagarde speaks, we will hear what the actual news is, and then we can sell our positions in the market. So buying the rumor and then selling the news is a good way to always keep in mind, always keep it at the back of your mind with regards to market sentiment, because people by our very nature want to be are hopeful, and whenever we hear a rumor and we are able to buy into the market, the rumor sometimes pushes the market upwards. And normally, when the news comes out and it's not as good as the rumor, everybody sells their position where the market shifts to the other side. So never forget that. Again, don't forget the phrase buy the rumor, sell the news. Alright. Hope everyone's having a good afternoon, good time, learning something, learning a few things. Thank you, especially. Thank you for staying with us this afternoon. If some of you guys were not able to view the information or some of the videos that we've done, feel free to watch our past videos at our link. You'll see a lot of information, a lot of data, and we always share our thoughts, our ideas with you guys. As you know, here at Trading Star, our goal is for you guys to make trading part of your lifestyle, and for trading to be adapted on the way you want to live your life. So we're not gonna be. I know there's gonna be some traders. I know there are traders that hold a lot of accounts, a lot of money, and then the market consumes them. That's good if you want to make a lot of money, but for some that want to do this on the side, or for those who just want to make trading as a part of their daily habit, we hope that our information sharing with you guys gives you some ideas on how to customize trading for yourselves. So before we end, I'll give you a quick rundown of the common mistakes, or some information with regards to let's do just a quick recap about market sentiment. Make sure that you never use market sentiment on its own. As you can see, as you've noticed, I've always been relying on fundamental information, and I've always relied on the technical side, as I discuss here with you guys today. It has become a habit that you always factor in the three analysis principles with regards to trading in the market. So it's the fundamentals, technicals, and market sentiment. So making sure that you are always putting those things in the back of your mind for every single trade will hopefully improve your your trading positions or improve your percentages with regards to trading. Um, we haven't discussed how to maximize your positions yet. We'll be discussing those in the future topic. How to properly use leverage to your advantage, maybe. Or if you guys have a specific topic that you want to discuss for us as a team to discuss, um, I'm not the only person sharing the idea. We have a team here that will try to help you and try to give you all the information that you guys need in order to become successful with regards to trading. Feel free to share with us your thoughts, and if you guys have techniques that you or trades that were successful for you guys, we'd love to hear from you guys, and we'd love to share the and celebrate your successes with you. So as we wrap up, let's check out the chat. And oh, hello. Oh, hello, Mr. Oh, Sheriff. Especially the NFP. Yes, the movement is crazy. Yes, Sheriff. Movement is crazy during the first Friday. This was discussed during the first Friday, every first Friday of the month. This was discussed a lot during the fundamental session, and I've shared over there. Just watch the video. I've shared over that and how non-farm payroll provides how you can use non-farm payroll to trade once a month in essence. So you just log in a few hours on once or maybe just an hour or two and once a month, and you can already maximize your trading. So yes, Sheriff, NFP is probably one of the key movements or key factors with regards to trading. And welcome back, Tony. Thank you for the compliments. Hope you had a good trading week so far, or well, it's Tuesday, so I hope you had a good trading last week. Hopefully, this week will be a good trading week for you as well. And feel free to ask any questions if you guys have anything. We'll be sharing the links to some of our channels in a bit. Okay, almost done. So before we leave, we'll show you guys again the most important. So this is a reminder about what's gonna be happening for the rest of the week. Some of the information that will be coming up. Make sure there's no, and I know it's gonna. I know this Friday is the first Friday of December, but looks like non-farm payroll won't be until next week. So make sure that everyone's ready for that one. And so for this week, if I had to choose, I'm probably choosing this. The preliminary GDP could be a huge movement for the dollar. And then Friday, the unemployment change. And I'm predicting that the speech from Lagarde on Friday will be a major market mover for the euro. So let's see what's gonna be happening for this coming week. It's a good week for trading. There's a lot of good fundamental information. The market is moving. The market is shifting a bit. There was a couple weeks lull a few weeks ago, but this week is showing to be hugely profitable or huge potential for this week with regards to trading. So for everyone else who are still here, thank you so much for sharing your time with us here at Trading Star. And hopefully I'll see you guys next week with a lot of success stories with regard to how much you've made money and how you've used the information that we've shared with you guys as a way to supplement or replace or just add on for your Christmas shopping. Alright, thank you everyone and have a great day. See you.